Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Alex Coffey, a Senior Market Strategist at TD Ameritrade, for a year-end technical performance recap of the Nasdaq 100 and how retail investors managed their exposure to the market in 2023. Alex, it's great to see you as always. Welcome back to Trade Talks. And I don't think we'd be having this conversation if we thought about market expectations at the beginning of the year relative to where the market ended up. I don't think many people expected us to have the kind of run that we've seen since the October move.
I certainly was not in the camp that thought new all-time highs a year ago at this time. So it's certainly been fun to watch and an impressive rally. Anytime you look at a year performance chart of any asset, let alone the Nasdaq 100, and you see the low point in those first 2, 3, 4 sessions and the highest point today, you know it's been a good year. And you see that when you look at the Nasdaq 100, up over 50% year to date, nearly 6,000 points to the upside, new all-time high set today, as I said, and about 3 and 4 of the names included in the index higher on the year. It's been really robust and a really powerful rally in 2023 as we come to the final stretch here of what's been a fascinating year.
Equally as impressive is the Investor Movement Index, which aggregates TD Ameritrade retail trader data. And you can see just how much exposure they did have to the market, the stocks that they've traded in and out of. You and I cover that monthly. From a year-end perspective, just how much did they dial it up this year?
Yeah, so we don't have the final report out in terms of a December reading, but I can say through November, I thought it was quite interesting how much this syncs up. Oftentimes. So if you go from December of 2022 through November of 2023, the IMX is up about 24.7% on that time. So that's going to be investment exposure through the behavior that TD Ameritrade clients exhibited through their positioning and portfolio posture. It almost perfectly mirrors the year-to-date performance of the S&P 500, which is up about 24% thus far in 2023. Now, it's a little bit more, and that also has to do with the fact that throughout this year, as we've talked about, there's been exposure into some of the Magnificent Seven names that have been huge performers. If you looked at the most important names to the Nasdaq 100 this year, of course, you're going to see NVIDIA, Microsoft, Apple. As those 3 names alone, not even the full Magnificent Seven, accounted for over a third of the rally in the Nasdaq 100 so far this year. 7 of the 11 months that we've got data for so far, we did see net equity buying. So there was some months where there were net selling of equities, maybe for profit-taking purposes or during the banking uncertainty earlier on in the year. But really bullish year for markets, bullish year from a portfolio posture perspective of TD Ameritrade clients, and we only saw 2 decreases going back to November of 2022 in the IMX. So consistent increase of an exposure from TD Ameritrade clients.
And Alex, as we go into the new year, I guess the key question is just how much of this has been priced in or overpriced, and especially since the move that we saw with the Fed just last week with their meeting. Is this overpriced? Are we at a sweet spot, or valuation starting to tick up a little bit too much for comfort? Or people going to start to think about taking some profits as they go into the beginning of the year for tax purposes? So what are you going to be focused on as we head into the new year?
Yeah, I think like the Fed has recently indicated, they're shifting their focus maybe away from price pressures and inflation onto things like economic trajectory and the labor market. I've been in that camp in 2024.
All right, Alex, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.